Good evening, devils and friends of the devil. It's time for BTC Bear. I was out last week, so you didn't get a video. Apologies for that. I was on vacation, but I'm back. And thanks for the tweets. I owe you a video as a result of that. As I explained last week, or actually, I guess 2 weeks ago before my vacation, I'm going to be splitting my Sunday videos into two parts. We're going to have just as long and just as analytically detailed a video as you're used to for the public. And then we're going to take it up one notch or 10 and create a member video where we give more instruction and more detail, but also importantly talk much more about trading. As I've explained in multiple videos, I think technical analysis and trading are completely separate disciplines. They're related, they're obviously complementary. You kind of need one to do the other, but a good analyst is not a good trader make, and vice versa. So trade setups, risk management, risk control, trade selection, trade identification, all of these, portfolio management, position sizing, the use of leverage, all these techniques have nothing to do with an Elliott count or a fib pull or a Gann square or a volume profile or anything. It's stuff that was derived initially from longer term investing and honed over the years, especially in after the advent of algorithmic trading, to take advantage of market inefficiencies. And so how you do one does not necessarily inform how you do the other. I will say that to do risk management properly and to do trade selection and trade identification properly, you need to master technical analysis. It's a required skill set to be able to find probabilities accurately, because if you're not a good technical analyst and you're trying to play probabilities improperly based on poor technical analysis, well, that's a quick way to wreck city. But the marriage of good technical analysis and good trading discipline and risk management and best practices from a trading perspective it's the holy grail. That's how you make a killing. So I will be talking about that exclusively for our member videos, but I'll be giving you the TA side of things on the public side pretty much forever. So let me start it off with this nice little picture. It's one of my favorite pictures of all time. The Great Wave of Kanagawa is the name of it. I'm sure you guys have seen this before. And the reason why this is the introduction to my video today is Bitcoin has moved up a couple $1,000 since I left for vacation. And when I got back, the whole world was bullish. Everyone's talking about, Bitcoin is going to moon now, and it's bull city. And while that may be temporarily true, I want to remind you that, especially if you're into Elliott waves, there are degrees at play at all times during a cycle. There's a tide, then there's a wave, then there's smaller waves and tiny little waves and even ripples in the water. And don't get all excited about where the tide's going because you see a wave or a ripple that's headed in a different direction. Just much the same way that water flows, you are going to get wrecked by one of these rogue waves that you see in this picture here. If you're in a little boat thinking that you're headed to the shore and you don't see this coming because you're missing where the tide's headed. Okay, it's very important to take a big picture perspective in your trading, especially in your risk management. I do believe we're still correcting, and I'll make a case for that today. I also believe that we're impulsing temporarily, and I'll make a case for that today. And then for our members, I'll start to make a case for why you got to start getting active. Exciting times are ahead, fellas. This new high eliminates some possibilities for wave counts. The possibilities are narrowing with every major pivot. We're getting more and more confident that there's a small subset of rules compliant possibilities to consider in your trading. And that means higher confidence, and volume is starting to kick in a little bit. And there's a lot of win-win setups that are coming up here, guys. Bull and bear setups that work both ways. So I'll be talking about that, and over the coming weeks, expect the live trade channel to be lit up. I apologize in advance. This video is a little longer than usual because I'm pulling up a few new tools, and I also didn't have anything prepared. So I charted a part of the impulse that we're in right now that was pretty complex. And it took me a little longer than I expected, but it's all there. So you can fast forward it if you don't like it. But I figured I wouldn't edit it and leave it all there. So it's a little longer than usual. And then the member content is coming soon, possibly tomorrow morning. All right, guys. So the question of the day, are we done? Is this it? Is this 5.8K low the end of it? And it was first time rejection, second time rejection, third time's the charm, and we're off to the races. Is that what's going on? I think the answer is, to me, quite obviously no. And I'll explain to you why that's obvious. And then for the public video, I'll do one count, which has this as the W, an ABC zigzag, this as an ABC flat correction. I know this was a price extreme to the bottom, but to qualify as an expanded flat, there's a minimum retracement of the A of, I believe, 105% or thereabouts, not just by a couple bucks. And so this still qualifies as a regular flat. And then for the member video, I will do the same exercise I did, I think 5 videos ago or 4 videos ago, where I counted every possible, or at least the ones I could think of, every possible corrective sequence that was both rules and strong guidelines compliant to the Elliott Wave rule set. And I think I came up with like 9 or 10 counts. And the reason why it was so few is because of this low invalidating several others. And I think this move here, if it doesn't invalidate, it certainly makes much less probable some of those counts. And so we're now narrowing down the possibilities, which is very exciting because that makes them more trade-worthy. And then the rest of the member video, as usual, I will be talking about trading strategy and philosophy a little bit, and then trade setups. But for this public video, let me start by making the argument that, well, there's 3 arguments to make in my mind as to why this correction is still not over. One's an argument based on time. The second one is an argument based on volume, which I think is very important, perhaps the most important argument. And then thirdly, an argument based on geometry. So let me start the arguments in that order. So I've already made the time argument. If you guys recall, about a month ago, which was maybe 4 or 5 bear videos ago, I put a video up there where I did an analysis of the entire timeline of Bitcoin from inception all the way to now. And I put up a bunch of different counts, and I did a Fibonacci time sequence assessment of the lengths of the corrective sequences that followed the motive sequences. And if you recall, this correction from 20K here towards the end of last year to now, even now, a month later, is nowhere near a reasonable Fibonacci time sequence. Not even near the 382, which is on the lighter side. Not even near the 236. I think it was around 15% or so when I did it. And it didn't matter whether you were thinking that this was correcting the entire cycle 1 for Bitcoin, meaning from inception until the end of 2017, so almost 7 or 8 years, or whether you thought we were correcting just one major wave, probably a 3, a primary degree 3 or something, of that first cycle still in progress. It didn't matter because just not enough time has transpired. So I'm not going to make the same analysis as I did before. Just go and rewatch that video, but that's an important argument to remember. Secondly, from a volume perspective, I also made this argument a few videos ago, but I want to be a little bit more specific today, which is why I'm charting on Coinbase, which to me is the FOMO exchange. This is where if John Doe and Jane Doe are going to be FOMOing in and firing up their old dusting off their accounts on Coinbase, which is their exchange of choice. By the way, no knock on Coinbase. It's a phenomenal business, and I actually know the president there. He was a partner of mine at a former investment firm. So I have a high degree of respect for Coinbase, but the reality is they cater to the retail community, which is why it's such a great business. That's where a lot of the interest is. But Coinbase, if they're a proxy for the non-professionals, the retail investors, the people who are not schooled in technical analysis and are just FOMOing in, well, the volume here is very low. In fact, it's getting lower as the correction is going on. Lower highs. This is the highest high, then a lower high, a slightly higher high here to put in this major peak, and then a lower high, a lower high, a lower high, lower high, lower highs right here. I mean, it's the trend is undeniably down. Okay, so that to me means that the correction ain't over and potentially could be going on for quite some time longer, because what this means to me is this big spike here put in the first phase of the correction, and we're still working on the second phase, the consolidation. Or in Wyckoff speak, redistribution is going on here. This was marked down, this is redistribution, and there's going to be further markdown in the future. Obviously, if you look at a different exchange like BitMEX, which is where a lot of the professionals are, or I should say either professionals or aspiring professionals. This is the degenerate exchange where people go for 100x leverage. No knock on that either. I think it's a phenomenal business. I wish I would have come up with that idea. But where is it? Oh, I'm looking for XBT USD. So I bet you volume is the opposite. Yeah, sure enough, the volume profile looks very different. Look at that. If this were truly representative of the entire crypto universe, I would be singing a different tune. This certainly does look to me like this could be the end of the correction. This is a consolidation period, and then boom, we're off to the races. Now the time argument still holds, and I haven't even talked about the geometry yet. But from a volume perspective, this is kind of what I would expect in order for me to really believe that this impulse is for real, that the third time's a charm. Unfortunately, BitMEX is the most idiosyncratic of all crypto exchanges, given the amount of leverage and such. But we don't have an exchange that represents all of crypto. This is one of the problems, is you have to chart on many different exchanges to get a real view of what's going on, both in price and time and volume. So one thing I like to do as a proxy is, I think I've done this before in a prior video, but look at coin market cap, which I think captures either all the volume or the vast majority of it, right? So harder to see the chart here, just the layout is not as clean as TradingView, but you can see here a series of lower highs, lower high from here, and lower high from here. This is also, if I could draw an arrow, declining. And that is not healthy for the argument that we're done and we're correcting. We need a capitulation dump that rivals this in volume for me to get convinced. And then on the rebound, especially when it covers a 30-40% move up, I want to see real volume. Because what I'm expecting is, whoops, I don't know what I did there. Anyway, we can go back to this to make the argument. What I'm expecting is a period of consolidation that looks a lot like what's going on here. Again, remember, this is BitMEX, so it's the exception to the rule. But let's use another exchange that's highly used, like Bitfinex or something, which has leverage too, just not 100x. And sure enough, even on Bitfinex, not so good for the volume. You can see it's declining. I mean, undeniably, and I would say that that's true for the vast majority of exchanges. It has to be, because we checked on coin market cap, and for all transactions, it's been declining. So this as a rebound impulse off of a major correction, multi-month correction, I'm just not buying it. The volume's not there. The divergence leading up to this is not strong enough. That's actually a major point. I prepared all these random oscillators that I'll review with the members that you guys may not be familiar with, but trust me, these are all very important. And none of these oscillators show persistent bullish divergence, which is what you would expect for a trend reversal. Okay? One thing about divergence is that people don't appreciate enough, and I see this mistake being made a lot, even among our member base actually, which I hope to rectify as of this video, as of our member video. But one divergence or even two doesn't mean a damn thing, especially if it's coming off of a very small time frame. A little bit of divergence could mean that you're putting in a 4 after the divergence that you see on a 3. I mean, yes, you could trade that, but it's not the type of divergence that you're expecting out of the end of a cycle, right? You should be seeing multiple divergence at the 1 hour or higher time frames before a trend gets reversed. Multiple, not 1 or 2, but several at a high enough time frame. And you don't see that. I'm not going to do it here because it's so small, and at this degree there's so many to look at. But trust me, you can go and do the exercise yourself. It's not the pattern that you would expect for a permanent trend reversal. It's the pattern you would expect for maybe a new pivot like this one, but not eliminating all of this and moving on with life. Now, there are some momentum indicators I've added here that are important to consider as well if you're going to do that level of analysis with oscillators and indicators. And I'll cover that lightly here and in more detail with the members, but I want to point you to a few. This is the stochastic. I don't think it needs any introduction. It's one of the most used oscillators to find divergence. This is one that I used a lot in the stock market that I haven't seen in crypto, but I found an indicator, ADX. It's basically a momentum indicator. And at least in the stock market, anything over 20 is a decent sized trend. Anything over 50 is a strong trend. If you're 100 plus, like you see here, which is crazy, but not so crazy for an asset as volatile as crypto, then you're in a strong trend, right? And we are now in a strong uptrend given the readings here, which leads me to believe that this is not a corrective sequence. I think this is probably an impulse in progress. Of course, you got the RSI, and then there's a version of the MACD that I prefer called the 31016. And basically, you set the MACD settings to 31016, and the person who popularized this, her name is Linda Raschke. She's probably one of the best traders of all time, and certainly the top female trader of all time. But an absolute legend. You can Google her and find out all about her. She was very successful personally, and then ran a hedge fund, and just a rock star. And she popularized this 310 MACD, which I pull out on occasion, like now. But anyway, you can do your own research on it and decide whether you like it or not. I use it, and there's specific applications to it for shorter time frames, scalping, day trading, and even some swing trading. So I'll cover that in the member video in more detail. But pick any oscillator you want, and you're not going to see the type of divergence that you would expect to conclude a correction of this magnitude. At least I don't see it. So I've made the time argument, I've made the volume argument, which I believe potentially is the most powerful. Let's talk about geometry. So I'm on Bitfinex, but it doesn't matter which exchange you're on for this analysis. The wave shapes are close enough. As you guys know by now, my favorite geometrical tool is the parallel channel. Part of the reason why is I think it forces you to think about the x-axis, about time, since you can't draw a parallel channel on just one axis, obviously. And the way that it does that is by considering the slope of the median line of the channel that contains the move that you're channeling. Okay. I'll talk more about slope over time, but to me it's a very important metric to think about. And when I talk about slopes, I want to make the point that it's a relative comparison that I'll be making, because the slope changes as you scale up or down a chart or sideways, right? Now, there are methodologies that you can use to calibrate the slope, meaning you can set each bar to equal one tick up in price and keep it fixed that way, but it's just, I don't think you need to be that anal about it. I think you do have to do something like that for more serious analysis that requires a fixed chart, like with Gann analysis and such. But you know, for the purposes of slope, to assess whether one's steeper than the other, I mean, this is damn obvious, right? If I were to channel the two major phases of this correction so far, whether you're an Elliottician and you think it's a W and an X, or an A and a B, or you're some non-Elliottician who's thinking about the market in stages or phases, this is phase one and this is phase two to me, or wave W and wave X to me. And when you channel these, you see the slopes very obviously being divergent. This one's steep, this one's not. It's basically flat. It's the slope of sideways fuckery, which is what's going on right now. Where is the third stage? From a geometry standpoint, we established that a correction can't just have two phases, or typically does not. And to me, from an Elliott perspective, there's an argument that this is an X. But you really want to hang your hat on that geometrically? I mean, look how small it is, and it's almost just part of this sequence here, or this sequence here. In fact, I think it is part of the second sequence here. And if I can establish some credibility as to that reasoning, then I think all of you will agree with me that all of this, at a minimum, and potentially also this, is part of the same structure, the same phase, or the same stage of the correction. So in order to do that, I'm going to pull out some tools that you haven't seen me use before, but these are not my primary analysis tools, but they help out with geometry when there's not a lot of clarity, or, I mean, to me, there's crystal clarity. This belongs as one sequence and this belongs as another, but if I'm making the argument to people who might disagree, well, there's not as much clarity for you guys. So let me explain some of the things I do to gain more confidence beyond the channel that this belongs together and this belongs together. At least this for now, because I think it may turn up. So one pretty cool tool I like, I'm a big fan of Fibonacci. In fact, his math is the reason why Elliott Wave theory and all these other Gann, and I don't know that it's so much Wyckoff, but certainly Gann and Elliott, the reason why their methodologies work so well is largely because of Fibonacci. So one of the tools I like to use is, you can tell I don't use it very much because I'm having trouble finding it. It's this Fibonacci. It's not the circle, but it's a semicircle. Here it is. Fib Resistance Arcs. That's its name. Let me just start it. Okay, so in order to use this, you got to fix the chart so that you don't do any of this, right? Whenever you use a circle or any kind of square kind of geometry, if you apply it and then you change the chart by moving up like this or to the side, people who do a lot of Gann analysis are familiar with this. It'll screw it up, right? So whatever time frame you're doing it on, I've got the 2R for now, although I'll drill down later for some of the smaller waves. But you know, make sure that it fits neatly on your chart vertically, meaning the whole sequence is contained and not scrunched up like this. Okay, and then make sure that you can't squeeze it in anymore. So squeeze it all the way in, and make sure that whatever time frame it's in, you squeeze it all the way in on TradingView. And then slap this puppy on from a significant high to a significant low. Not Elliott speak. Just waves that you want to analyze. And what I would expect is that, and now I am speaking Elliott, that one sequence Elliott wave pattern that belongs together should have some kind of Fibonacci relationship, much like pulling a fib from here to here. Or sorry, not a fib, doing a projection, a fib-based projection from here to here off of here to measure the length of the C relative to the A, right? And we've established it comes damn close to 1272, which gives us confidence this is an ABC. It's a very likely wavelength for a C, right? Well, similarly, look at these Fibonacci circles, right? If this is the A, I would expect the C to be related to it by some Fibonacci number, and the 1618 hits it right almost to the tick. Gives me further confidence this is belongs together geometrically. Furthermore, the retracement internally goes to the 382, almost to the tick, twice. So I don't think I need to convince anyone this belongs together geometrically. The question is, does this, right? So let's take this off. And let's look at this wave sequence here. All right, so where's that tool? Oh, here. I want to do it from here to here, which is what kicked off this entire sequence from the top. And you can see this is the 3618 right here. It's capturing this move. I mean, it's like hugging it almost perfectly. The 2618 isn't as important geometrically. It misses this low, and it captures the end of this sequence here a little bit. But it certainly acts as a boundary for this. And then the 1618 is, of course, is significant. It acts as resistance here and as support here. But this, to me, is some evidence that all of this stuff belongs together geometrically. Oops, sorry guys, my computer just glitched up, so I had to reboot it. But where was I? I was, you may not have seen it because I think it crashed and it stopped recording, but I was making the point that analyzing the sequence of waves from here downward as belonging together geometrically made some sense from a fib perspective, and it did. So let me just take this off. What about this little X thing here? Potential X wave. Well, the X wave that I don't think is an X wave. I think it's just an A wave of the X. Back to the circle. So, whoops. Major pivot. It's a major pivot. And look at that. The 100% cuts this off. Cuts this off. Acts as, hugs this line. And then the 1618 is right here where it's facing resistance. And then these arcs, the 618 contains this move. I would say that the geometry belongs together, right? Another tool that we can use is just good old GAN. Let me zoom into a lower time frame actually to do this. 1 hour. All right, so like I said, all scrunched up. Move this up. This is especially important for Gann analysis because it's so sensitive to the geometry of the wave shape. So I'm going to use the Gann squared fixed, which is a nice feature on TradingView. Keeps the square fixed, and I'm going to stick it here. Seems like a geometrically significant level, right? This arc here and this arc here, containing these moves. This is 45 degrees. You can confirm that if you want by putting a line here, pressing the shift button. You can see it's right on there. It's 45 degrees, right? And as Sam has explained, 45 degrees was a very significant mathematical slope for Gann. Just as a little aside, I've experimented with it, and I use it as a guideline sometimes now for if something is 45 degrees or sharper or steeper in slope, it tends to be impulsive or an impulsive portion of a corrective sequence. And if it's lower than 45 degrees, then it's hard to call that an impulse. It's probably a corrective sequence. It's not foolproof, but I've back tested it hundreds of times, and I would say it's generally pretty accurate. Just a little tip. Okay, so do these Gann fans show something about the geometry? Well, this obviously, because I fitted it to this initial sequence, right? So to the right of it, if it continues to do that, then the argument that it's all part of the same geometrical pattern is very strong. And as you can see, I mean, look. It lands right on the peaks. Boom, boom. And then further down, it almost calls the bottom to the tick right here. And now it's buttoned up against this Gann fan right here as it goes up. So, I mean, for all these reasons, and just the obvious reason that it channels well, which I think to me is ultimately the most powerful reason, albeit the simplest, I think that I'm convinced that we're still correcting. And that what we're seeing now is an impulse within a corrective sequence that is part of the X wave. So I think this is what's happening. So now let's turn to Elliott Wave. I've done this labeling before just to refresh people's memories, or if you're joining us as a new viewer, then welcome, and thank you for tuning in. So, pretty tough to argue that this is not a zigzag. I've done the analysis that it could be a diag in some other videos, but this is really by far and away the highest probability count for this move. I mean, not even close to anything else. So to the right of that, then this is, there's multiple possibilities for what this could be, and that's where all the debate is, right? Again, the bull case has this as a tiny little x that is so geometrically insignificant that it's hard for me to consider that, but it does measure decently well. It retraces, I think, around 35% of this move up here, which, it's a little light, but not bad for a double zigzag X. I care much more about the lack of time transpired for such a short little move than I do about the retrace level. And then you've got this really nasty, ugly zigzag that's barely a zigzag as the potential Y. But I think this ugliness and this lumpiness is significant to me, in that if you're going to find ugliness anywhere, it's typically in the B wave or the 2 or the 4 or the X wave. These counter trend reactionary waves within the actionary corrective sequence tend to be ugly like this. So I'll give you, I just gave you a beauty argument as to why this is probably not over. So that would be, what I'm saying for this particular count is that this is the A, this is the B put in, and we're going up for the C of the X. So if in my coloring convention, if it's going up, it's green. If it's going down, it's red. Just to keep the labelings a little easier to read. So, and we've measured this before, but the guideline says that an X wave for a sideways combo, which this must be, if this is important, this must be. If it's going to retrace all the way up to the guideline of 90%, this must be a sideways combo because, well, I shouldn't say must be, very strongly will be a sideways combo because a double zigzag, a WXY double zigzag wouldn't retrace that much. More common level would be between 50 to 618, more like 50%. But I think one of the things to watch is how far does this retrace of this W? Because if it lands anywhere near 50%, then it could just be a double zigzag. It could be ABC, long ABC flat pattern, and then another sharp ABC Y, right? If it starts to retrace higher, then it opens up a ton of other probabilities. Like you could have a triangle, you could have a flat correction, or any of the flat family corrections after as the Y. But we'll focus on that when we get there. I think for now, let's focus on what this might be. And if it's a flat correction, just measuring where the C might land. Got the B right there. It's not crazy to think it might land at the 1618. I've done this before, but just to illustrate again. And I actually, when I did it, yeah, that's right. I did it before when the new low was in. So I've done this the same exact analysis before. What you would expect as the highest probability zone would be around 130%, which is around here. So it may very well land here, but it also could very well land here. Now, what I hope is it lands around here, or even here, a little lower, because then it would give us more confidence that what the correction is a double zigzag. Since the guideline has that the retrace for the X wave of the W for a sideways corrective structure should be about 90%. And 90% happens around here. Now, there are some exceptions that they make, allowing up to around 80%, which is around here. So even the 1618, would fall short of this, but maybe be within exception guideline territory. And remember, a guideline is not a rule, so just because it doesn't go up there doesn't mean it absolutely can't be. It's just highly unlikely to be. In fact, they would the guidelines body, the EWI, would strongly recommend you reconsider your account, although it's not literally a rule violation. Probably not probable. Probably not probable. Didn't mean to say that, but so if it ends around here, well, it's very confluent with the 50% highest probability zone of retrace for a double zigzag. So you've got an ABC, A, B, C, 50%, and then another ABC that follows. Now, that ABC, I'm going to have to change the time frame here to measure that one, just to make more room on the right. If this is what happens, in this confluent area right here, then you would expect the Y. Let me start labeling WXY so you know what I'm talking about. W X. You would expect the Y to be related to the X by some Fibonacci sequence. The highest probability is the highest probability is 100%. But given how deep that would be, I think we also have to allow for 618. So that would be from here to down here to up here, right around 127. And the 618, obviously the 100% takes you to negative below 0, so 618 would take you to around 4,700 bucks, right around here. Now this would be a smaller zigzag than this one. And so what did I say about slope? Actually, did I say that about slope? Well, if I didn't say it earlier, here's an important truism. Maybe that's too strong a word. An important observation that many, not just me, many have made about parallel channels and slopes is that if you're considering two moves within one sequence, like for example WXY, and the second structure that's being compared to the first structure, so the Y being compared to the W, is shorter in price, then it's almost always longer in time. Okay, the two are inversely correlated. So in a typical zigzag, in a classic zigzag I should say, where the A and the C are the same length, the slopes tend to also be, I'm sorry, where the lengths are, the price covered is the same length, then the slopes also tend to be the same length, meaning the time sequence transpired is about the same length. Here, because it's smaller, I would expect something like this. Well, if this is the x, I would expect something like whoops. Something much more sideways. Something like this maybe. Okay, so let me just show the waves. Where when you channel it, the slope is clearly less steep than this one. The alternative obviously is that it's very sharp, and generally speaking that means that it would take up less slope, take up less time, but it would travel more distance, but you can't because this one was so sharp already and covered so much distance. So what are the things that I would look for in this count? Well, obviously the first thing is, where are we going to land in this move up, right? If this is what's in play, then what does that say about this? Well, let's analyze this. So let me take off all. Well, maybe I'll just copy this chart and do because I may have to refer to it. Oh, what happened there? It said make a copy and it said invalid chart link. Huh. Not sure what's going on there. Okay, so maybe I'll just have to do it on a separate chart. Bitfinex. Let's do it. Well, maybe that 30-minute maybe. By the way, this is another reason why I think this is an impulse, is look at how much separation there is. Now we're at the 3 hour. the Vegas waves are most powerful when used at the 1 hour or higher time frames. And you can see the Vegas waves are providing not just support, but there's a lot of separation. More than, well, is it more? It's about the same as from here. I would say maybe a little more. It's about the same separation as was achieved in this moonshot right here, and similarly on this one. So that's very impulsive to me. That's very bullish. Typically, if it were a corrective structure, especially at the tail end of a C wave, if this was A, B, and C, you would expect that the Vegas waves to be hugging the bottom, even crossing the lower portion of this wave shape, but it's nowhere near. Right? So we can talk about how to play that, but go along. You know, I would go along this. Even if you think that you're in bear mode and this is an X wave, there's no reason why not to take profit when the market gives you opportunity. One of the things I preach to our members in the private videos, but also in our Discord, is you got to take the approach that you don't give a shit whether it's bull or bear. All you care about is if the market gives you a setup and you measure the probabilities and they look good, take it, right? I don't care whether I'm going long or short. I'm equally comfortable doing both. And just because I have this more bearish view than Sam doesn't mean I'm not going to play this the same exact way he would. You know, if this retraces, I will buy it long based on my analysis today. By the way, this is all fresh to me too. I came off vacation. I'm doing this live with you guys. So the perspective I'm gaining is as new to me as it is to you. But this Vegas wave separation, very bullish. Now the volume, not so hot here, but you know, on some other exchanges it's higher. So I don't know what the average looks like. And CoinMarketCap doesn't have enough of a charting platform to really be able to drill down at this level. But I have to assume that even though on Bitfinex it's not looking so hot, that it's considerable when compared to these lows right here. Okay, so this is the 30-minute chart of this, just so you guys are aware. Now, if you use different kinds of EMAs, one I've used a lot is basically the EMA 20 and the EMA 50 and the SMA 200. This was taught to me so many years ago. I forget by whom, but basically the SMA 200 is a major level to follow from a trending perspective. And then the 20 and the 50, which you can't see here because it's hugging the line so closely, but when those cross the 200, it's significant. Very much like the Vegas waves. And for day traders and people who are trading shorter time frames, I've found this to be a pretty cool tool. As you can see, you know, the 20 and the 50 crossed the 200 here. The 20 and the 50 are green and yellow respectively, and the 200 is this orange line. And at every retrace, they've met, but not crossed with the same aggression as here, right? And the same thing here. They met, they crossed briefly, crossed back up, moving up, right? So anytime you see this cross, recross, cross, recross, you got to think potentially a triangle is in play. But you can see it's been quite accurate. The 20 and the 50 cross the 200, big dump, cross but then recross or nothing. They cross again, dump, they cross for good this time, is up, 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 cross, recross, cross, recross, cross, recross, cross for good, down, big dump, cross, up, all the way up here. Now we're in a sequence of cross recrosses. But generally speaking, it's a very bullish picture here. Very short term, I'm talking, not longer term. So let's analyze this. We've already had a count that had this as a 1-2, so I'm not going to 1-2. I'm not sure there's another way to count this, to be honest. It's because this is so impulsive, you know, and it's going downwards, and then this is clearly an impulse upwards. This has to be a C wave or a Y wave of some sort. It can't. This can't. I mean, I guess in some weird count, maybe this is an A, B, and then a long C, but it's not credibly a corrective structure by itself, right? So in combination with this three-wave structure and this three-wave structure, it makes an expanded flat, and I think that's the only way to count it with any kind of confidence. Now, it's not a zigzag as you expect out of it too. Nevertheless, it's quite deep, and so I think it's fine. It's a 1, 2. So if that established, let's put a parallel line here so I know my place. So where are we in this 3? It's kind of a big question, right? And it's tough to know because actually there was a dialogue that the members are having on the Discord that how do you channel something, or how do you measure something, or how do you do anything to something that looks like a moonshot like this with such light retraces, you know? If this is a 1, 2, 3, 4, and this is a 5 of the 3, I mean the retraces are super light. This is the orthodox top, since it's an expanded flat, A, B, C. I don't think there's another way to count this either, in the same way as this. So this was the same thing count Sam had, I believe. But if this is the 3 of this bigger, higher degree 3, then this is the little tiny 1 expanded flat 2. Wow, a lot of expanded flats. 1 here, tiny 1 here for the 1, 2. And that 1 here. If this is 1, 2, 3, 4, 5, is this all the 1? And this is the 2. I mean, see, it's too light to be a 2. But this is deep enough, but then this 1, 2 is too small. 1, 2, and this is all the 3? Or is this all the 3? You can see why it's, you know, you can't have a lot of conviction because, you know, even from down here all the way up here, to call this one wave, the retrace is only 23%, which, you know, it happens, but you don't want to hang your hat on that as the most probable count. But then what do you hang your hat on? If you think this is 1, 2, and this is the corresponding 3 and 4, well, that plays a little better because you move it up a little bit, and now it crosses the 2, 3, 6, but it's so light. And then this is the 5, so is this the 3? This is the 1, 2, 3, 4, is this the 5? Or is this 1, 2, all of this the 3? Or is all of this the 1 and this is a 2? Or is all of this the 1 and now we're putting in a deeper 2 in progress? Unclear. Very unclear. There's multiple counts out there. It's very hard to say one's better than the other. The only thing we know with conviction is this is a 1 and this is a 2. What happens after that, it's hard to know. So let's measure this relative to this just to get an idea of where we are without even knowing exactly the subwave counts. From when you're confused as to where the 1s and the 2s and the 3s and the 4s end and begin, one of the things I do is I just look at Fibonacci relationships to see where there might be some confluence with the potential end of this entire sequence, however it may count or subdivide. So let me just draw a line here to mark the beginning and the end, the 0 and the 5 right there. So from the 0 to the 5 of the 1 down to the 2 here. Well, you don't get a ton of help. The likely areas where it would end don't really nail any of this move. 1, 2, 7 is kind of right towards the bottom half of this move here. 1, 6, 1, 8 is nowhere to be found with anything that looks like the ending point. You've got the 2, 6, 1, 8. This could potentially be interesting. What that would imply, though, is this is some kind of 4 being put in, and then a 5 up for all of the 3. And how would you count that 3? Well, because this is so clearly a 1, 2 of some sort, whether it's a lower or higher or same degree unknown, 1, 2, and then this move is so sharp up, you'd have to count this as a 1, 2, 3, 4. This is a 5. It would have to be 1, 2, 3, 4, 5 in progress. Unless it's an extended 1. You could count this as an extended 1. 1, 2, 3, all this up, all the way up here, 3, or even, no, it couldn't be here, 3, 4 here because there's overlap. It'd be 1, 2, 3, 4, 5 of the 1. Then you have a tiny retrace for a 2. And then you've got 1, 2, 3, 4 being put in of the 3, and then a 5 up for the 3. But that would be 3 of, and then 4, and then 5 of the 3 would go beyond the 2, 6, 1, 8. So that doesn't work so neatly either. I'm not saying it's not valid. It's just we're looking for a confident count. You can't really, even with Fibonacci help, identify one. So let's see if channeling helps us at all. If this is 1, 2, and this is 3 and 4, which are 2 points that are very credible given the shape and all of this distance covered so quickly, right? You would channel the 2, the end of the 4, here to the top of the 3, which would be here. Either here or here. Here. And then you would pull it up to figure out where the 5 ends. Now that is interesting. It almost nails the end of this. By a hair, it doesn't hit it. So from a channeling guideline perspective, this is a completed impulse. 1, 2, 3, 4, 5. Now does that play? Let's see. Well, we already established that this is a 23% retrace from here to here, right? The wave counter certainly supports this. 1, 2, 1 of the 2, 1 of the 3, 2 of the 3, 3 of the 3, 4 of the 3, 5 of the 3, 3, down for 4, and then up for 5. So 1, 2, 3, 4, and a short 5, but it was a short 1. So the guideline of equality says that's acceptable and even expected. I'm a little bothered by how short, not in price, but in time this 4 is, but nevertheless it counts well. And then that would mean that this is the 2 being put down, but it looks so sideways. It's hard to count this as an impulse. So let's zoom in on that. Well, can you count this as an impulse? Wave shape certainly says you could. 1, 2, 3. Well, there's overlap if this is a 4, either here or here. It would have to be a diagonal, but I don't see a 3-wave structure here. This counts much better as a 3-wave ABC, zigzag. 1, 2, 3, 4, 5, A. Some kind of B, which we'll talk about in a second. And then either 1, 2, 3, 4, 5, C, or 1, tiny 2, 3, deep 4, 5, something like that, with this being the B. Now let's measure it. Got this as a potential A. Well, we were expecting some kind of Fibonacci relationship to the C, or equality. And yeah, you're pretty close. The C is almost the A. Depending on where you anchor it, if you see this as a triangle, and you move this down to the orthodox top, it gets a lot closer to 100%. So I think this is much cleaner as a zigzag than anything else. Now, what the hell is this? It's a pretty tough sequence to analyze because you've got the high here, and then it's a lower high and a lower high. So that to me suggests a triangle, but the wave shape here makes it challenging. Let me zoom into the 15-minute. Even then, not enough definition. 5-minute. At the super degen time frame now. Okay. So let's zoom in on this little puppy here. Well, I see something. I do think this is a triangle, which would help our count. Now keep in mind, guys, I'm doing this real time, so maybe you learn something from the stream of consciousness. It's freestyle charting, as they call it. The reason why I think this is not only is this converging, and also it belongs in the story that this is an impulse and this is an impulse, but I see another triangle in here. That's why I immediately said I think this is a triangle, because what else could contain a triangle in this position other than if this is the B, a B, A, B, C, D, E. But if it's a B, the D can't go below the B, and I think it does barely. I was thinking A, B, C, A, A, B, C, B, A, B, C, C, A, B, C, D, A, B, C, E, right? I was thinking like this. And then A, B, C for the C of the higher degree triangle. So I had this as an A, B, C, 1. Sorry. Yeah, A, B, C, the first one, the A, B, C, second leg, the B, or starting the B. I guess it would have to be A, B, C, B, and this would be A, B, C, A, B, all the way up to here, C, for the C, the D, and the E. So does that play? By the way, you can in fact have a B, or a C, or a D, or an E of a triangle be a triangle itself, but only one of those waves. And if that's the case, then everything else has to be a zigzag. You can only have one complex wave. But since that was invalidated because the D can't go below the B, this must be the B, A, B, C, which forces you to either have this as an A, B, C, or this is an A, B, C. Now, which counts better? Well, I think it has to be A, B, C, because if this is an A, then what the hell is it? It has to be a diagonal with the overlap. But then you have a 3 that's the shortest, because you have 1, 2, 3, 4, 5. All 3 waves. ABC1, ABC2, ABC3, ABC4, ABC5. But the 3 can't be the shortest, so that's invalid. You could have a double zigzag, though. You can have a double zigzag within a triangle, and that's possibly what this could be. Could be A, B, C, X, A, B, C, funky A, B, C in there, or much more likely A, B, C, X, A, all of this A, B, C, where this is the diag. 1, 2, 3, 4, 5. B, C. Another diag to end it. That's what it is. Not a lot of other ways to count this. And this is so clearly 3-wave. A, B, C, W, A, B, C, X, and then a diag to start a bigger C. 1, 2, 3, 4, 5, A, B, C. You can see the B here for the B of the Y, and then an ending diag to put in the 5. right? So we've got ourselves a three-wave WXY structure, but you can only have one within a triangle. Everything else has to be a zigzag, but I think it is. This is zigzag clearly. This is zigzag clearly. Double zigzag for the C. Where's the bottom on this one? Right here. So A, B, C, very clear. D. And then this E wave. A, B. Diag for the C. 1, 2, 3, 4, 5. And it works because this 3 is longer than the 1, and the 5 is longer than the 3. So we got ourselves a count, right? You could have just been anal and faked the funk and said this was some kind of B, but not the way we do it. So you've got an A, some kind of B, which is a triangle, and then a C that comes down here. Now the question is this a valid 5-wave C? Because it has to be 5-wave if this is the E. So where's the 1 and the 2? And I can see it because I'm at the degen time frame, but let me expand it so you can see it too. 1, 2, 3, 4, 5. See it? 1, 2, 3, 4. Does it overlap? No. Oh, 3 here, sorry. 1, 2, 3, 4, 5, 3, 4, A, B, C, and then this 5 down here. So it works. It's very ugly, but it works. And I'm not sure that there's other ways to count this ugliness. Okay, so going back to a more reasonable time frame like 15 minutes, if this is A, B, C, some kind of zigzag, what the hell is this? Well, in a three-wave structure, you could either have another three-wave structure that's a B or an X. So either this is a double zigzag combo or some kind of sideways pattern where it's a zigzag, an X, and then a flat or a triangle or something as a Y. Or this is a simple flat. And we've had so many of them in this one. There's one here. There's one here. There's one here. I mean, we've had multiple flats in a row, so it wouldn't be that surprising if this bigger correction is a flat. Now, if this channel is correct, and this is all one completed impulse, I mean, it certainly channels beautifully, then this, it's got to be a 2 of this 3, that I haven't put up here yet. And that makes for a pretty long 3 if this is just the 1 and the 2 of the 3. So I'm going to reserve judgment on what this count actually is until it plays out. But, oh, actually it was on the other chart. So. But if this is going to play out, even at just 127, if not higher, to put in the flat, I'm expecting this to be an extended 3, like a pretty highly extended 3, because this 1 was so tiny. Either that or this is 1, 2, 3, 4, 5, and then 2, and all of that's 1, 2, and then we see a 3, a 4, and a 5. Actually, that's more likely. That's more likely. This is what I'm going with. Some kind of 4 in progress. And then a 5 that ends, well, who knows where it ends, but in terms of projections, it's hard to tell because we don't know where the 4 is. But if this is a flat, then it looks like it's probably going to be a classic flat where the A and the B and the C are almost all the same size, because this is clearly A. If this is the A of the B, and the B will end somewhere around here, then it'll reach equality, the C, around right around where the 3 ended, or the A began, right? ABC, ABC, and then you have a 5-wave impulse down that ends right around here. So if we measure it around here, even allowing for more room down, the 5 at around 100% belongs around here. This is a little falsely precise because we're, the 4 is not even in and we're projecting the 5. But I'm trying to illustrate the point that this very credibly could be the 1 and the 2. 1, 2 of a 5-wave move to put in the C of this X wave. Now, does this channel well? Well, we don't frickin' know because the 4 is not even in yet, but let's attempt to do it. This is the 1 and the 2. Then the temporary channel suggests that you connect the 1 and the 3, pull it down to the end of the 2 to project the 4. So per the channeling guideline, I would expect the 4 to end right around here, the bottom boundary, which is around where we expected it to end if it's a flat, which would be the simplest way to think about this, right? A, B in progress, C up here, then of the B, and then C down here. So let me label that. Something like this, okay, but a lower degree. Something like this. And then I would expect the 5 to be up here. Well, the 5 up here, guideline of equality, 1 measured off of the bottom of the 4, which is around here, 100% will be right here. Doesn't quite hit the top of this channel, like Elliott Wave theory suggests that the channel will project. But as I've said many times, both in our member training videos as well as on the public YouTube, I've found the median line of the channel to be as good a predictor as the top of the channel boundary. So let's see, if this is the end of the 1, this is now very falsely precise because we're projecting many waves out, but if that's where it ends up being, and it's a proper 2, it should fall to around the 618, the 50 of the 618. So it should get us to around 6,900 to 7,250, around there for the 2, higher degree 2. So 1, higher degree 2, somewhere here, 3, 4, 5. Like that. Now, does that make sense? Well, at 6,900 to 7,250, let's call it 71. Let's call it 7,000 for the sake of just looking at it on this chart. At 7,000, that's this price level right here, right? If this is a 1 and then a 2 at 7,000, 3, 1618, the 1, gets you to around here, 4, and then a 5. That makes a lot of sense to me as a possibility. So there you have it. You've got a count, some explanation as to why I think we're not done correcting. From a geometry perspective, you saw me use some new tools. Hopefully that's helpful to you. From a volume perspective, I've made that point before, but I'll reinforce it again. It's so important. And then from a time perspective, which also I think is very important and quite often neglected by Elliottians. And then at the micro level, you've got a roadmap potentially for this impulse, which is a C, going up. And as this gets more likely to be this, there's some juicy trade setting up, guys, because you don't want to miss this impulse up if you're a bear. Oh, I'm bearish, so I can't go long. No, bullshit. You take whatever the market gives you. because you're not a bull or a bear, you're a trader, or a properly trained trader. I for sure will be running a live trade on this if this is what happens. I mean, it channels so well, even though the count from a retrace perspective is so tricky. This is why you have to have so many tools. You have to have channels. You have to have channeling guidelines. You have to have Fibonacci projections and retracements, even though retracements are worthless because they're so light in this scenario, to measure the possibility of this as a 1-2 and then put it on this chart to see if it might reach this level. It all seems very possible. All seems very possible. And you know, the beauty of it is it doesn't matter whether the bull or bear is right, because in both cases, the most probable case has us going up. And so with that thought, I will leave you and get working on the member video. See you guys next week.